All right. Good morning, everyone. This morning, we are looking at the correction of errors and the suspense account. Now, as accountants, this is one of the most important topics throughout your journey as accountants because you always be dealing with accounting errors. And as you graduate and you go up in your journey as an accountant, you are also going to be learning how to deal with accounting errors under IAS 8 and other adjustments that may be created by creative accounting and manipulations and stuff like that. So this is the basic thing you must understand when it comes to accounting errors and the suspense account. It is part of the series on trial balance validation. Okay, most people don't know that we do trial balance validation. You must always validate your trial balance. And this is like the foundation of accounting. So when we talk about an accounting error, what is an accounting error? An accounting error is actually an irregularity, or it can be a mistake, a misstatement, an omission, right? In your accounting records, that usually results in incorrect balances and may render financial statement unreliable or misleading, right? So anytime you have an irregularity, which could be an omission, a misstatement, it could be anything, right? That results in incorrect balances. It can make the financial statement unreliable or misleading, which can affect the users of the account for decision making. So errors may arise due to oversight, maybe you didn't see, misunderstanding of accounting principles, maybe carelessness or pressure of work or pressure from management. So this is tied to the way we work and our ethics as well, because pressure can also make you make some mistakes, right? So when we talk about accounting errors, they can be classified into two categories, right? We have errors that are not disclosed by the trial balance, and we have errors that are disclosed by the trial balance, or simply errors that do not affect the trial balance and errors that affect the trial balance, right? So we are first going to look at the ones that do not affect the agreement of the trial balance. For instance, let's say you pass a double entry, right? Debit, cash, 200. Credit, an asset you sold for 200. Assuming this entry was passed, then the trial balance will still show a debit of 200 and a credit of 200, right? Now, what if the figure was actually 2,000? That means there was a complete omission of 1,800 from both sides. But this is 200 is equal to 200 on both sides. So this will still balance, meaning that the trial balance is not going to show the error. It will still balance anyway. Are you getting it? So when mostly it is a one-sided error, okay, it will affect the trial balance. If it's a two-sided error, it will not affect the trial balance. Are we okay? So that is what you usually get. Now, let's look at errors not affecting the trial balance or the agreement of the trial balance. So if it's a two, remember this, if it is a two-sided error, it is definitely not going to affect the trial balance. So what are errors affecting? Errors not affecting the agreement of the trial balance. These are errors which, when they are committed, they do not cause the trial balance totals to disagree. So in most cases, such errors do not violate the double entry principle, right? So they don't violate the double entry principle because both the debit and the credit entries are effected equally. So I told you that they are mostly two-sided errors. So errors in this category are corrected through appropriate journal entries, and they do not involve the suspense account. So for these kind of errors, they usually do not involve the use of the suspense account. Okay, so remember, so the errors that do not affect the agreement of the trial balance include errors of omission, we have errors of commission, we have error of original entry, we have error of duplication, error of principle, error of complete reversal of entry, we have error of compensation. So you must understand these errors. So usually, a lot of students don't really put these errors in their head. Yes, it's not really necessary. Sometimes they can ask you, but however, you must know the error and how it should be corrected, and you must be able to explain the error in your own way. Even if you don't know whether this is omission, commission, but I believe if you know them, it also helps because sometimes questions are theoretical and you have to, know the meaning of the error and be able to explain. All right, so let's take them one by one. Let's first look at error of omission. Okay, omitting a, a transaction completely. So when an error of omission occurs, a transaction is completely unrecorded in the accounting books. That is, neither the debit entry nor the corresponding credit entry is made, meaning that you didn't record it at all. Okay, so complete omission is an error of omission. All right, so how do these errors occur? Now, errors of omission usually arise due to what? Oversight. Maybe you forgot a transaction. Are you getting it? Maybe you had an oversight, or you forgot a transaction, or you were having an excessive workload. Okay, that's why we say accountants shouldn't have pressure. You should pay them well, so so that they don't have excessive pressure. Okay, their work is supposed to be balanced. That's why we have something called segregation of duties. All right. So since both the debit and the credit aspects of the transaction are omitted, the trial balance will still agree anyway. So the trial balance will definitely agree. So let's look at the effect on the trial balance. Now, when you omit a transaction completely, the trial balance will still agree. The financial statement will be misstated due to the missing income, expense, asset, or liability figures. So that is it. You have omitted the transaction completely. What is the method of correction? Now, if you want to correct this, you must record the transaction using the appropriate double entry. Okay, that it's as simple as that. Okay, so that's how you deal with error of omission. For instance, let's take a simple illustration. A rent of 3,000 was paid in cash, but it was completely omitted. All you have to do is what? Debit your rent expense account and credit your cash account, right? So that's all you have to do. And usually they will ask you for narrations, right? If they don't ask you, you have to bring the narration. Sometimes they may tell you to what? Ignore the narration, right? So once I debit rent and cash and credit cash, I'll be like, this is what the correction of the rent expense that was previously omitted from the account. Learning how to narrate is very important because we wouldn't understand what the journal entry represents until you have what explained what the error represents. So that is how you correct some of these, right? Now that was the error of omission, a very simple one. If it is not done, you do it. Now let's go to error of commission. What is an error of commission? An error of commission occurs when a transaction is recorded with the correct amount and on the correct side, debit or credit, but it's posted to the wrong personal account. So let's say that an amount that went to Kweku Pratt, okay, let's say a debtor, an amount that is supposed to be debited to Kweku Pratt account was actually debited to Kweku Pratt's account. You see the similarity in the name, okay? So it was posted to the wrong person's account, okay? So this commonly arises when two accounts have similar names. Yeah, sometimes you can even have K Bobby and another K Bobby, but one may be Kweku and one may be Kojo, one may be Kin. All right. Now, how do these errors actually occur? Now, errors of commission often result from confusion between accounts with similar names, such as customers or suppliers, with closely related surnames. All right. So usually you can have these kind of errors. So what is the effect on the trial balance? The trial balance will agree because the debit and the credit entries will still be equal. All right. So if I have a sale and I debit my Kofi Pratt account, right? And I credit sales, it will still balance, right? Instead of it going to Kofi Pratt account, right? So the individual account balances will rather be incorrect, but it will still show a clear double entry. So how then do you correct an error of commission? First of all, you must what? Reverse the entry in the wrong account and record the entry in the correct account. Usually students get this wrong. We'll come and look at other errors where you have to do them twice. right? So if the original entry was a debit, then you are going to credit the wrong account and debit the correct account. If it was a credit, then you debit the wrong account and credit the correct account. That's how it is, right? Very simple as ABCD. Now, let's take a simple illustration on an error of commission, right? So let's say you purchase goods of 55,000 from A Mansa, which were wrongly posted to A Mensa's account. You see, it can happen. We are all human. To err is human, and to forgive is divine, right? So the correction of the journal entry, okay? So first of all, because it was supposed to be what? Credited to A Mansa's account, you pass the correct credit to A Mansa's account, right? Then the one that was wrong, you take it out. So this means that if you are looking at it carefully, you did a plus to A Mensa's account, right? You did a plus to A Mensa's account. You added to A Mensa's account by 55,000, right? And then the actual A Mensa's account showed a 0. But remember that this guy is supposed to be 0 and this one is supposed to be 55. So what do? You are going to add, right, 55,000 in this account. And how do you do that? You are going to credit this account, A Mansa's account, with that 55, right? And you are going to have to what? Debit to reduce this, because this is a supplier's account. It holds a credit balance. So you are going to debit to reduce this by transferring this to what? A Mansa's account, right? So you take out the 55,000, meaning you are reducing 55,000 to bring this to 0, and you are increasing this by 55,000 to bring this to 55,000, because this didn't have 55,000 before, now it has. And this one shouldn't have had that 55,000, right? So this is how it is. And this is what? Being the correction of purchases that have been wrongly charged to A Mensa instead of A Mansa's account. So this is how we deal with an error of commission. Now, the next error we want to talk about, which is very important, is what we call the error of original entry. The error of original entry. So what is an error of original entry? Now, an error of original entry occurs when an incorrect amount is recorded in the books of prime entry, and the same incorrect amount is subsequently posted to both the debit and the credit accounts that have been involved, right? So although the amount is wrong, the double entry principle is still observed, right? So how do these errors occur? So this type of errors arise when a wrong figure is entered into the subsidiary books, such as the purchases day book, the sales day book, or the cash book, and the same wrong figure is posted to the ledger account. So you've made a mistake at both sides, like the example I gave before, right? It's an error of original entry where we posted 200, right? For the cash transaction, which should have been 2,000. Now, since both the debit and credit entries are made using the same incorrect amount, the trial balance will still agree. All right. So examples: goods that are worth 4,500 were purchased from Yukiwada and Company, but were mistakenly recorded as 450 in the purchases day book and posted accordingly. So this one usually it happens from either the day books, right? Or sometimes in rare cases, it can happen on the source document. There was a transaction where the invoice itself was wrong, right? It can happen from the day books. So it's not always that you are going to see it from because if it happens from the source document directly, then it can affect the day books, affect the ledger, affect the trial balance, affect the financial statements, right? Because it's the cycle of accounting. So these things are very important. When you understand these things well, things like auditing become easy peasy because you are working back. So with such a transaction in audit, you have to go back to check the transaction's values, whether it was accurate. All right, because transactions can be manipulated to affect the account straight from the document, the source document, the invoice, purchase order, whatever it may be, right? Yes. So what's the effect? The trial balance will still agree, but the individual account balances and financial statement will definitely be misstated. All right. So this is what usually happens with this. So what is the method of correction? How do we correct these type of errors? Now, if the amount is understated, just add the difference. So if it is lower than expected, add the difference. If it is overstated, deduct the excess. That's all. So you are going to deduct from the account balance to make the entry on the opposite side of the account. That is all. So if the thing is a debit, you credit. If it's a credit, you debit, right? So let's see something, a simple illustration. Now, we sold the plant for 202, right? Which was incorrectly recorded in both the cash account and plant disposal account for 220. So what has happened? 202 to 220, is that an understatement or an overstatement? So something you sold for 202 has been recorded as 220. You have overstated it by how much? By 18, right? So if you have overstated the thing by 18, what is the original entry? Always, that's the simplest trick. What is the original entry? You sold the plant, right? So you were supposed to debit your cash. You are going to receive cash for 202 and credit your plant or the disposal account, right? With the same 202, you see? Pressure. So 202 and 202 is what is supposed to be recognized. But we have recognized what? We have actually recorded 220 and 220. That means you have to reverse this back to what? 202. So how do we reduce 220 to 202? We have to take out 18 from this 220 and 18 from this 220. How do you do that? Since this is a debit, you credit cash, right, to reduce it. And since this is a credit, you debit what? Disposal or plant. So in simple terms, the error will be corrected by debiting your plant disposal account 18 and crediting what? Your cash with the 18. So that this one reduces to become 202 and this reduces to also become 202. So that is how this is done. And the narration will be being correction of sale of plant wrongly recorded as 220 instead of 202. You can say being correction of what? An overstatement of the sale of plant. It's still understood, right? There's no one right way of writing narrations. Just go with the flow. All right. Okay, so that was it. Then let's look at error of duplication, right? So we are looking at the errors in order of difficulty. So let's look at error of duplication. Now, what is an error of duplication? What is an error of duplication? Now, an error of duplication occurs when the same transaction is recorded more than once in the accounting records. Because each recording contains both a debit and a credit entry, the trial balance will still agree. So the trial balance will definitely agree because there's a debit entry and there's a credit entry. So trial balance will definitely agree, right? So what's the effect on the trial balance? It will agree, just that the amount affected will be overstated because you have doubled it. You have doubled the transaction. You have done it twice. And so far as you have done this transaction twice, definitely it is going to balance. How do you correct this? To correct this error, reverse the duplicate entry by debiting the account that was originally credited and crediting the account that was originally debited. So it's just like the way we treat overstatements and understatements, right? So let's take a simple illustration. Now, we purchased a motor van costing 45,000 for cash, and we recorded this twice. So how do you correct this? Because you have already what? Done this twice, right? By crediting your cash and debiting your motor van, what do? You reverse it. Okay, you reverse it. How do you do that? You are going to what? Debit your cash account and you're going to credit what? Your motor van account. That is it. So that you change the effect. So you're actually changing the effect. So this will be the correction of the purchase of a motor van recorded twice. So you can say overstated. It is still understood. Does that make sense? It's very simple. Now, the next thing we want to talk about is an error of principle. Now, when it comes to error of principle, just remember wrong class of account. The principle of accounting is wrong. The wrong class of account. So always remember Wrong. Error of commission is wrong person. Error of principal is wrong class of account. There's similarity between them. One, you are going in a wrong, so it's wrong classification. That's error of principal. For instance, if I make a purchase of inventory, then it is called purchases. If I make a purchase of plant, it is not purchases. But some people will buy plant and put it in purchases account. It's wrong. Error of principle. If I sell plant, you can't record it in sales account. Sales is sale of goods that I buy for resale. So if I sell inventory, that is what we call what? That is what we call what? Sales. But if I sell anything else, that is what we call what? That item's sale account. That item's sale account. So remember this. Now, an error of principle will arise when a transaction is recorded in the wrong class of account. Wrong class of account. So thereby violating what? The fundamental accounting what? Principles. Are we okay? So the classes of account include, we can have what? Asset account, liability account, capital account, revenue account, and expense account, right? So you know that all these accounts are what we normally use in what? Accounting, the elements of accounting, right? So these are the various elements of accounting that we have, and all of them have their corresponding accounts, right? Now, how do these errors occur? They occur when, for example, something like a capital expenditure is treated as revenue expenditure, or revenue items are recorded as assets or liabilities. So despite the misclassification, the double entry rule will still be maintained, so the trial balance will still agree. The trial balance will definitely agree. So how then do we correct this? What is the method of correction? You must reverse the incorrect entry by posting to the opposite side of the wrongly affected account, and you must record the correct entry in the appropriate account. Okay, correcting this type of errors are usually not cumbersome, right? If something was done the wrong way, then you reverse the account. It's that easy. So the purchase of a motor van costing 6,500 was correctly entered in the cash book, but wrongly debited to the purchase account, as I said earlier, instead of motor van account. So what do? You are going to debit the motor van account instead because it was credited earlier, okay? And you are going to credit the purchase account because it was debited earlier to reverse the transaction. It is that easy, right? So being the correction of motor van wrongly debited to the purchase account, right? That is it. And the final one we have to look at before we take a basic question is the error of complete reversal of entry. Now, what is a complete reversal of entry? This is when the correct accounts are used, but each account is posted on the wrong side. So instead of a debit in this account, you have credited and you have debited it. So if I sold goods for cash, I'm supposed to credit sales, but somebody ends up debiting sales and crediting cash. Okay, if this is done, it's a complete reversal of entry. Are we okay? Now, what will happen? Trial balance will still agree. Account balances will be incorrect. So how do we correct this? To correct this, what you are going to do is reverse the wrong entries by doubling the amount. This is one thing I want you to understand. Because one, that account shouldn't have had that amount. So you have to take it out. Let's take an illustration, right? I said we sold goods for cash, right? Simple illustration, sold goods for cash. Let's say 100. So this is what will happen. If this is my cash account and this is my sales account, let's see the original entry they have made, right? Instead of crediting cash, instead of debiting cash because you are receiving the money, they ended up crediting cash and debiting sales. So let's see how to correct this. Let's see how to correct this. Let's see how to correct this. So in that case, we have, let's say, the recorded sales, 100, and the recorded cash, 100, right? So if this has been done, what do? First of all, make it 0. That's the first doubling. The first entry you do to make it 0. By doing what? By recording your sales here 100, and recording cash here 100 to make this 0, right? So now that this is 0, it has cancelled the first entry out. Then you now come and pass the proper entry by what? Debiting again 100. This is the original, like the correct entry. And you are going to what? Credit sales with cash 100. So you see, by doubling this, you cancel the original one. That's the first entry. And the second is to record the correct transaction. So this is how you deal with error of complete reversal of entry. All right. Error of complete reversal of entry. Now, assuming goods worth 200 were purchased on credit from PB Limited, but were wrongly debited to PB Limited's account and credited to purchase account, the same thing, you are going to what? Double this. The first entry is to cancel the original, and the second entry is to post the correct transaction. So the narration will be being correction of complete reversal of entries in respect of credit purchases from PB Limited. All right, so that is one. Then the final one we have to talk about is the error of compensation, right? For the error of compensation, this occurs when two or more independent errors cancel each other out by the same amount, resulting in a balanced trial balance, despite the presence of the error. So how do these errors occur? So the situation arises when one account is overstated while the other is understated by an equal amount, either on the debit or the credit side. So this one is usually rare, but it happens, right? Are we okay? It happens. So what do? So you reverse any overstated account by posting to the opposite side and adjust the understated account by posting to the missing account. Okay, the missing amount by posting the missing amount to the correct side. So for instance, let's take a simple illustration. The sales account and motor expenses account were both overstated by 50 cedis. So what do? You are going to debit the sales account by 50 and credit motor expenses account by 50. So that is how you deal with these type of errors. So what will be your narration? What will be your narration? So your narration could be being the correction of the overstatement in sales and motor expenses account. So there are so many ways. I told you the narration is done independently. It depends on your own style of how you want to narrate. So this is the basics, right? The errors that affect the trial balance. In our next session, we are going to look at errors that do not affect the trial balance. Then we'll start taking some heavy questions on how to deal with errors and suspense accounts. So don't forget to like, subscribe, and share this video to your friends who want to understand accounting to its core. All right. I'm the accounting surgeon and I'm here to diagnose you and give you a better surgery so that you don't have any problem. So in our next session, we would dive into errors that are affected by the trial, that affect the trial balance, and we will take some questions as well. So please comment if you have any questions or reach out to me and I'll gladly help you out.